Welcome, everyone. This is Karen Ray with OptionVue in Chicago. Can you please close the door? Thanks. It is a kind of a Indian summer afternoon here in the Chicagoland area, and I want to welcome everybody who's attending. Do want to give a special welcome to our dealer who's previously been dealing just in Spain and Portugal, Ricardo Sanz de Herrera, and he has now taken over a couple extra countries, Netherlands, Belgium. We had an opening in our dealer area in Netherlands, Belgium, England, Ireland, France, and Italy is what he's adding to his repertoire. So if you have any needs as a brand new client, then you need to contact Ricardo if you're in one of those countries. And so we want to welcome Ricardo to the, if he's attending, to the webinar today. Also wanted to say this is a collaborative effort. I got the wonderful OpScan formula that I'm using in today's webinar from Steve Lentz. He's my OpScan guru, in addition to being our head coach and educator here with Discover Options. He's a wonderful, brilliant man in terms of technical analysis, and also OpScan formulas, anything that has to do with mathematics. He's right on the ball there. Also, Jim and Ken helped me, because when you get a list of some of these candidates, it's for people like me who don't really trade the markets a lot. I'm not real familiar with the stocks that popped up, so they helped me to kind of talk a little bit about, at least for my sake, to get an understanding of some of the fundamentals that are going on with these stocks, when these stocks have earnings, when they might be in a move in terms of maybe a takeover. And these are things that you as the client need to be familiarizing yourself with as well, especially when you're running an OpScan report. But before I get into this whole thing, I do want to kind of give you an analogy. I was thinking this morning, because we've got an appointment in October, we're going to have 20 people from Ireland, Switzerland, and Austria meeting us down in Chicago, and they're all options traders coming from overseas. And we're going to be meeting at the top of one of the towers. I'm thinking it's either going to be the Hancock Building, Sky Tower, or the what used to be formerly the Sears Tower, which was built in 1970. It's a global icon here in Chicago. It's 110 stories tall, the tallest building in North America. And in 2009, it was taken over by a global insurance broker named Willis Corporation in 2009, and they built a sky deck. And if you guys are familiar with what's called the ledge, where you can go onto the sky deck and look straight down, 108 stories down, or the equivalent of 1,353 feet, and you're really scared when you do this, believe me. So I kind of thought of that analogy this morning when I'm like, you know, you get out of the elevator at 108 to 110 stories up this building. I've actually been at the Sears Tower, not the Willis, since it's been renamed, but when it was the Sears Tower, I went up there and my feet were shaking. The building was actually shaking, and I looked down and I looked outside. It wasn't until I got my bearings that I kind of gained a little bit more confidence. And that scary feeling, I think, is what people get when they don't have a really good analysis program like OptionVue to help them get their bearings, to help them find their way, to help them see clearly. The visibility is so much better when you've got the right tools. And using OptionVue is going to make all that difference. So when I had Steve put this scan together to start looking for the right tools and getting the right information, it makes all the difference. Now, this is a proprietary formula that Steve came up with. It looks for uptrending stocks that have pulled back today and making the IV, or implied volatility, go up a little, and more can be done in the options that way. Also, Steve wanted me to make sure that when you use TradeFinder, when you're looking for these things, that you use the default models in OptionVue that are right here under View, and then under Default Auto Strike. I've got the actual the strikes set up for in the monies, moderates, and then also I've got under View default models, I've got the slippage on hit bid ask. So those, along with the commissions being included, I've got the commissions in the info button set up under security margins, under the commission schedule. I got the commission set up at $1, okay? So these are the things that before you get going on all of this, you have to make sure that you set these up to be customized to perform the best for us and find the best trades. And we want something where we don't have a lot of wide differential between the bid and the ask, because that's going to be an illiquid situation when you're getting in and out of a trade. So when I ran this OpScan formula, and this was yesterday, I ran my Karen Ray's bullish stock formula from Steve, and I have it looking for upward trending, as I said, stocks. A list came up, and I can view the report once I ran go. This report, again, was from yesterday. So I got this list yesterday with these parameters, and I came up with a list of all of these candidates, and I highlighted all of these by holding the shift key down. I'm going to show you, but I'm not going to do it because I already did it. But hold the shift key down and right click, and then you can add these to anything that's in the quotes display. But I've already got them done, so I'm not going to do that right now. So after you run this OpScan report, all the candidates that came up, and I had a list of 40 candidates that showed up. I had actually created beforehand a tab. We've got the ability now here down at the bottom of the quotes display to show various tabs with all the different assets that are of interest to you when you're doing trading. And I set this particular tab up so that I could display only the ones that that came up from this OpScan report first, okay? Then, because we're doing the 4 S's today, the 4 S's would be, and we're doing number 1 right now, is the scanning, using OpScan to uncover bullish trending stocks, ran the OpScan, highlighted all of the candidates, and right-clicked, and then put them in a separate tab. Now, I can go through and very carefully examine these different stocks. Maybe I did eliminate quite a few with Jim and Ken's help to kind of knock out the ones that really were in possible takeovers or things like that. I did actually this morning then go and run, and I can do it again, but I run to get quotes on all of these stocks and the options on these stocks by going up to the word Net View and then update asset files, and I can say all asset files or selected asset files, and here's the list. And then also update the price charts. Let me just make sure I get, okay. So I've got this and this are the same. I'm doing the selected assets that are right here from the quotes display. I am updating all of these right now, and then I can, let me hit go. And it's after market close, so it's going to use the closing prices for today. So we will kind of then take a look with, real-time information, as real as it gets after market, just a few minutes after market close. And then we're going to go into my number 2 on my 4 S's for today, which would be searching. And we're going to view the price charts of these stocks and set up a couple targets. And then we're going to use TradeFinder to find the best call purchases and also look at the vertical debit spreads. And when I was working on this, Jim suggested that I look for stocks that are kind of going to be trading about 10% higher than where they are right now, between the area of October 3rd and the 10th, and I'm going to get out, in other words, a week before October expiration. I don't like to look at the weeklies. I'm looking at the regular stocks, the regular monthly expirations, so you can actually take those out if you want to. But let's look at a price chart on some of these right now, and I've actually set this up on Facebook already because Facebook is going to be my #1 pick after going through most of these, most of the 40, and narrowing it down the candidates, and then we're down to like 15 or 20 of them now. But Facebook, with you're going to see down here X1, X2, and X3, because I did take the weeklies out. If I didn't take the weeklies, those actually would be showing up right here on this price chart. I've got a price chart. This is the price chart. It's been obviously on a very bullish trend here. And then I can invoke the volatility, and I can see the red line representing the volatility of the stock, meaning statistical. The applied volatility has been increasing, as you can see, well, over the last 1.5 years, but it's down a little bit from there in terms of the average, but still we're in a semi-decent percentile ranking, a 36th percentile ranking on IV in the history of the trading of this, of the options trading of this stock, and then a 48th percentile on the statistical. This Facebook has the most dollar volume options traded. You always take this number and multiply it by 1,000, okay? That's daily. Daily DVO is the daily option trading volume. So what I did then was I wanted to project. Well, let's come back. I'll use the bullseye target in just a minute, which is right here. But to go to the next, to take a look at the next price chart, all you have to do is be in a chart first and then hit the next button because we're browsing the next. So the next one on this OpScan report that showed up is Herbalife. And again, nice bullish pattern. We've got the listing here. This is a toggle on and off to show us the volatility. And we can see the averages here of statistical and implied. Implied is a little higher in the last 3 weeks than it's been over the various periods of time. And then again, I've got X1 and X2, meaning my regular monthly option expirations. So I can invoke a chart here, which we'll do in just a little bit. On to number 3. I'm not going to necessarily have time to go through all of these, but you're going to get the general idea here from what I'm doing as far as browsing is concerned. Again, okay, Sears holding chart, and we've got the wonderful upward trend here. The statistical volatility is way up. The implied is kind of way up. As you can see, we're a little bit higher here than we have been over the past, and so forth. So far, these are all very good candidates. Next is Prudential. Again, since the April time frame, we're seeing the price go from 55 all the way up to 80. Quite a nice run. Same thing with the volatilities are kind of nice here too. So you can kind of progress through these different price charts. We've got the famous restaurant chain here, and that came from Texas Roadhouse. Again, kind of a nice bullish trend. I also, you know what I wanted to just show you real quickly, you can invoke a secondary chart here. Let me make sure I know how to do this. The lower chart, you can have that set to put to call volume ratios, and you could actually look at line 1 being a call open interest or a call volume. Open interest would show how many option contracts are outstanding on a number of days. 21, I've got up to 40. I can do a simple or an exponential moving average, and if I want to say okay to that and then invoke that, I can actually use that as another indicator or another gauge to see the option open interest. Now this one actually is lower than some of the other ones that I looked at. Let's go back to previous. So I can see Prudential's open interest, that's trending up. And then previous to that is Sears, that's way up. And previous to that is Herbalife, that went up and it's kind of in a sideways holding pattern. And then in Facebook, still very, very much a lot of open interest. Call open interest on a 21-day moving, I think it was a moving average, kind of way up there in the stratosphere, kind of like in the Willis / Sears Tower stratosphere on that sky deck. So kind of cool. You can use that as another indicator to look at this information. So I'm just trying to get rid of that. Okay. So now back to setting up a target. We're still at number 2 on my list of the 4 S's. We're going to set a target up that's going to indicate where I think I want to be and where I want to be out of the trade by, which I said was October 3rd through the 10th, somewhere in that time period. And that would be before the first expiration. And this target is a little tricky. You can see, you're wondering, what in the world is she doing with this target? What does this mean? Well, very easily I can see what it means right here, okay? I can say the price is between 46 and 47.5, and I can widen that, so make it 46 to 49. I can move it in time, so now it's September 23 to September 30th. I can move it a little bit more, and so I should be able to kind of set these targets up. The other thing I could do is I can open up the matrix, and I can go to TradeFinder rather, and I can actually set up Facebook and set the target up here, and I can say the current price is 45, so if I'm looking for a 10% increase, then I'm going to just say 50, and then maybe to, well, okay, I want to use today's price, so let's say 46, so 46 to 51, let's say, so that's a 10% move by. The near date would be October 3rd. The far date, let's say October 10th. Okay, so when I go back to my price chart, it actually should reflect, it does reflect the date range, but it's not reflecting the target that I just typed in. Maybe somebody can help me on that. Yesterday this worked fine. Okay, I'm going to go back to TradeFinder. It says 46 to 51, and I've got my asset, Facebook, and I'm going to go ahead with this one because this is the main one I wanted to show you. The vertical debit spread and the long option. I'm going to go ahead and try and run this right now using information from today's close, kind of see what comes up. We've got a total of, 50 trades, which is the maximum OptionVue can come up with. And for the time period of my holding period and the price range that I specified, it is actually saying, and you'll see all along here, vertical debit spreads are my best possible scenarios. And then finally I come to number 32, which is buying a call, the long at the money for a weekly, which I thought I had taken the weeklies out of there. Let me just double check on that. I'll go back to, I'm going to go back to define and option, define and then auto strike. And for some reason these are not, these were removed yesterday, but they're back today, I think. So I'm going to take those out, and then I'm going to go back to TradeFinder, and I'm going to run this list again without those weeklies included, just because this is my preference, not for any other reason. And again, the vertical debit spreads are pretty much right in line. Finally, I get I get the 46 call. What's going on?
You did not hit apply. So
Oh,
just go in there.
okay. That's why I'm sorry. I didn't hit apply.
Close and reopen it.
Hmm?
Close and reopen the matrix.
Okay, so if I go,
Close it.
oh, okay.
No. Facebook. Facebook.
Oh,
Yeah,
dear.
go back to close display. Facebook.
Yeah, hang in. Okay.
Weeklies are gone now. Okay. Now
Okay.
run change rate.
Now run TradeFinder. There we go. So you guys get to learn from my wonderful mistakes what not to do. That's probably the best way to learn, I think, actually. There's this book that I used to read to my children about all the things that you shouldn't do, because we as parents do all these terrible things, and you can learn from our mistakes so that you don't make the same ones. Anyway, okay, so Facebook vertical debit spreads. I've got all of them coming up now. Then I'm finally on my long option, regular month, October expiration, my 46 call. So let me just analyze that real quick. And I'm looking at 21 days from now to get out, which is October 10th. And you'll see that this is the range. I'll go ahead and maximize this. This is the range that I'm saying that 10% move is where I think the stock's going to be. And you can see that for about 2/3 of that range, I am above the break even, the zero line. And for 1/3 of that, my trade is below, or I'm losing money. And I can take this little vertical wand and move it and see exactly, okay, if the price goes to 46.65 by 21 days from now, I'm losing $1,100. If it goes to 49.67, I'm making 26.59. So really a nice scenario here. All right, so I'm taking that, and then the other thing I want to demonstrate is the very first debit spread, which OptionVue is saying to do buy 63 of the October 48 calls at $1.15 and sell 63 of the October 50 calls at 70 cents. We're going to analyze that one now. And by the way, I forgot to go through and show you all the things that I set up here, so I'll do that in just a minute. So here's 21 days from now. I've just got that one line. I'm going to actually superimpose the other trade, which was the long call. So here you can see that this orange line represents the actual debit spread, and that's making a lot more profit, a lot more. So if I click here and I just say, okay, what if it goes to 50? The stock goes to 50 approximately, 50.05 or 09. I'm making $5,500. Whereas if I'm just going to do the long call and it goes to 50, I'm making $3,000. So there's a huge differential of $2,500 extra profit that I can just skim by doing the debit spread. And on the way down, it's still almost equally divided, 2/3 profit, 1/3 loss within my target that I set up of price of 50 to 55 by October 3rd to 10th. On the downside, that call is losing a little less money than the spread. But this is kind of the whole point of what I'm trying to bring out in this webinar today is these debit spreads are really, really nice, and they're much better for people who tell me, oh yeah, I can just get by with buying calls or puts, and I don't have to do anything except that. Well, I'm trying to demonstrate that using OpScan, using TradeFinder, you're going to find some really much better, more spectacular profit-taking candidates than you would on your own just buying an at-the-money call, for example, okay? So that is kind of what I wanted to show on that. Now let's go through, for the TradeFinder, I wanted to show you kind of the steps that I went through to get this set up. So in this case, I did a selected asset of Facebook. I set the targets up for the 10% increase, and I set my dates in there. The strategies, I told you we went through long option and vertical debit spread. The goals I gave the program were $3,000 of working capital. My comparison basis was I set it up for profit and loss. You can use yield or annualized yield. And I'm not including any existing positions, although that's a very, very robust area that nobody seems to use or even know about, is the TradeFinder can take an existing position into account and recommend a follow-up trade to that existing position, which is really, really awesome. And then filters, I know we just kind of made some extra parameters here that you can, if you really want to filter a bunch of stuff out and just get the creme de la creme, this is where we put in more option qualifiers. So you can put in minimum days to buy, minimum days to sell. You can put a bid-ask gap as less than or equal to a certain amount. I've got volume is greater than or equal to 1 because I do want something with some liquidity and volume as far as coming up on the list. And then open interest is greater than or equal to 1. So I can also put in avoid selling deep in the money American style options because we don't want to be exercised on that. So there's all these different filters that are all for option qualifiers, not for the stocks, but for the options. Then this is the most powerful part of OptionVue is TradeFinder. When you set these all up and hit go, this is the most math-intensive part of the program, is when it's actually trying to come up with and rank all of these different spreads, telling you not only what quantities you can buy or sell, but the prices at which you can buy them, and this is taking that slippage level into account. Remember I showed you under, well, I can go under slippage, either the default model to show you the slippage, which is hit bid ask, or you can individually change these in the matrix in the define section. So this is very powerful information coming up here with the net price, the worst case return, the expected return, which is a first standard deviation expected return. It's not going to encompass all expected return numbers, but a first case, a best case return, and a probability of profit. And you can go on and on, you know, to your heart's content, analyzing each of these. You would just click on one and hit Analyze, and you can invoke any number of timelines, kind of compare and contrast. I can superimpose the previous one and look at, you know, I'm making a lot more on this one than I am on the green one. As far as a profit on the upside, I can take the number of lines down and look at different time frames. So there's a lot of flexibility with what I can do here. Superimposing, I can actually blank out a trade if I want to. We call them cases. Blank out a case, you know, if I have like 13 or 10 different trade scenarios in here, and then I want to blank them out and look at just 8 of them, for example, I can do that. So there's a lot of flexibility in what you're getting here with the TradeFinder. So we viewed some of the price charts. We set up the target settings for at least one of them. I did Facebook. I want to also show you Herbalife. So let's look at a price chart on Herbalife. I want to make sure that I did go into the define and that I want to take these. Yeah, I did take the weeklies out. Okay, so they're not in there. So I've got September, October, November for the regular months. And then back to price chart. I can set up by invoking that bullseye target. That's how you hit that, to invoke that, is hit the bullseye target, and then I can scale these appropriately like I showed you. This is the price range and the date range, okay, and I can move this out in time. I can see if I butt it out further, then I can see X1 and X2, and I can set up an appropriate target, bullseye target, that then is used when I do the TradeFinder. So I can invoke Herbalife, go to the target, And here's that target, bullseye target information. Now, I don't have to keep that. You know, I can like do what we did before, just customize it to October, let's see, we said October 10th. And then I should put the far date first. October 3rd is the near date. And then today's price is 73.46. So let's say 74. And then on the high end, 10% higher would be about 80, 81. So let's say 80 to 74 being the low end. Strategies, same ones are already set up. Goals, same goals are already set up. Filters, same filters. Let's hit go. Again, kind of illustrating the very point I made before, the vertical debit spread. And there's all kinds of them with the expected return is how it's ranked. So you're going to see the top expected return first. And then as I go down, I've got 50 different strategies, this being the most math-intensive part of the program, as I mentioned. It's not until number 22, I think. Yep, number 22, am I getting a long call. So let's graph that long call, take it down to 21 days. You can see that my range, my 10% increase by October 3rd through 10th, I've got just this little teeny portion here where it's underwater. Everything else is way above in a very nice positive range. Let's just say if it goes to 79, I'm making $1,200, which is a really great profit on this long call. Now let's superimpose, let's go to the number one debit spread, hit analyze. I'm going to superimpose. So now I can see that debit spread. If I click on the debit spread and then I want to show what is the profit, if it goes to, say, the outer extremity, right almost at $80, I'm making about $2,200. Whereas on the call, I'm making $1,500. See, big difference. $720 difference in profit taking here. And also, the only benefit here is if it goes down against me, the call is losing less than the debit spread. But hopefully, you know, you're going to be out of it before that happens, before you have anything significant in terms of a loss. In fact, you probably want to get out, you know, right at 73.96 because that's where you start to lose money on these pretty much. So do you guys, I'm sure you guys and gals get the difference here in terms of what I'm trying to demonstrate. So it's only because I used OpScan to start with that I found these very high volume, and I can see them on the quotes display under DVO, dollar volume of options traded. This is times 1,000, okay? So we got very high dollar volume options on these two. Especially, and that's why I think we should put on well, I'm not recommending anything, but these are some things to consider along with these other candidates that are on this list, okay? So let's just pretend now that I'm going to do, since I was in this, list from Herbalife. Let's pretend I'm going to do one of those trades, and I'm going to say trade from the TradeFinder. I'm going to do number one, and I'm going to hit C for capture. So that actually puts that trade in there, and this arrow shows me that the trade is sitting up here somewhere. And since it's a call, I'm going to lower this so I can only see calls now instead of just the puts. So I got the long 6 of the 70 call. And this little arrow is new. Len programmed this in to show us that there's more of the trade hiding here. The short end of this is at 80, and everything looks good. Let's pretend I'm going to go ahead and put this on. I can also show a legend, so I can superimpose and show the price that I want to execute this for. So I'm going to short 6 at $1.79. I'm going to go long 6 at $6.25. It's going to take $26.88 out of my pocket because it is a debit spread, because the one that I'm buying is $6. The one that I'm selling is $1. I'm not getting as much, from the ones I'm selling as the ones I'm buying. So this is a debit spread. Okay, so we're going to pretend now. We're going to step here to number 3 of my 4 S's. And number 3 is we've, looked at the price chart. We've gone to TradeFinder. Now we selected a trade, and we're going to actually convert the trade so that we can keep track of everything. I've set the commissions up. We've got the slippage set up. Everything's looking good. So now the big fun thing is to hit the Convert Trades button, and that's going to make this prospective trade turn into an existing position. And I can right-click on here to show existing position so that we can see that it is now an existing position. I can then actually look at it in the T-log, and I can see the position itself. And it's right down here. We bought these at the same time as we sold these. This is Herbalife, the slippage, the commissions, and it actually records the volatility too that each of these was trading at. So now we're in a position to keep track of the position, okay? And when we close it, we can just take our profit and, quote, celebrate or salivate, whichever one comes first. Hopefully both. And then we'll be happy, and we're going to be happy campers that we used the OpScan to come up with the idea. We used the price charts to flip through all the different price chart opportunities. We weeded out some of the candidates that maybe were in a little too high risk situations with possible takeovers, mergers, maybe earnings were coming out, and so forth. In fact, the earning date is on here. This is a newer feature also. It shows after market close on October 22nd that Facebook is going to have earnings. So I'm getting out well in advance of any earnings date. Same with Herbalife. I'm out of that trade before the earnings date after market close on October 28th. Or in the case of U.S. Air, before market open on October 23rd. We want to be out of these positions because we don't want to be in the face of an upcoming tornado or a big storm or a hurricane, so to speak. So anyway, I'm not quite sure how to see questions. That's the only thing I might need Jim's help to see if Jim can come over here and help me figure out how to see the questions in case somebody is having some questions for me. Otherwise, I think I'm pretty much done with what I was going to illustrate, my 4 S's: scanning, searching, selecting, and salivating, or celebrating, however you want to say it. Jim, I guess Jim's not listening right now. All right, if you want me to share this formula with you, I can, unless you happen to see it before. Oh, there's Jim. Okay, help me with the with seeing what we got here for.
Only one question from Roland.
Oh, Roland, you have to ask me a question, huh?
It made no sense to me, so.
Uh-oh, well, if Jim doesn't know, I'm not going to know it, because Jim is Jim Quest. He knows everything. I've been using the survey feature to find stocks that have low volatility. Okay, well, yeah, maybe this is something I could answer later, Roland, because I didn't want to talk about survey today, so maybe you and I could go over your questions individually.
Because just less than $25 is 1,900 stocks. What does that tell you?
I'm not even following. I'm really trying to identify stocks within a price range up to $25. And what were you going to say about it, Jim?
There's like 3,000 optional stocks. 1,900 of them are under $25.
There's 3,000 optionable stocks. Only 19 of them are under
1,900.
1,900 of them are under $25. Okay.
Jerry.
Okay, Jerry, I use the probability of profit, best case return. Expected return is kind of neutral to me, not the best. Okay. Well, yeah, that's why we have different choices, because everybody can kind of feel a little bit different about what they want to pick. So, you know, that's flexible, which is great. I'm glad that, you know, you find it better to use probability of profit, Jerry, so I want to spread the word about that. You can do that certainly too. Okay, I guess that's it for today. And if you still have more questions, certainly you can email me, Karen, at OptionVue.com. I would really want you guys to get the latest version from us, because at least 3 or 4 things that I pointed out today are only in the current version, especially that up arrow or down arrow that shows you that there's more trades hiding in the matrix. That's kind of a very new feature. So make sure that you're all on board with our Star subscription, and that will get you the latest version at all times. Be in the know so you guys don't fall off the ledge, okay? All right, take care, and thank you so much for attending. Bye-bye.